Hey everyone, and welcome back to the Deep Dive.
Yeah.
Today we're going kind of niche, but trust me, it's fascinating stuff. We're looking at Indian wealth management, specifically through this company, Anand Rathi Wealth Limited.
Okay.
They just had their earnings call, and we want to see what it tells us, not just about them, but the whole industry. Where it's headed, what to watch out for. We've got excerpts from the call, and luckily you're here because this stuff can get pretty jargony. So, first impressions, anything jump out at you from this material?
Yeah, definitely. This phrase kept popping up, market agnostic growth. So Anand Rathi, they're bragging, right? 33% revenue growth, 34% profit growth just in the first 9 months of this fiscal year.
That's huge.
Oh, it's massive. But here's the thing. They're saying this happened while the market was, kind of tanking for a lot of folks.
Right, seriously.
They're all about how consistent they are, almost like they've figured out how to ignore all that volatility.
Hold on, other firms are struggling, and Anand Rathi's just chilling. How is that even possible? What's their secret?
Yeah, that's the question, isn't it? They're saying they already hit 75% of their revenue target, 77% of their profit target, and assets under management, that's up 39% year over year.
Those numbers are impressive. I'll give them that.
Definitely. But like you said, how are they doing this? One hint, they've got this super low standard deviation in their quarterly growth, only 4.3% over the last 11 quarters. That's a crazy steady, especially for finance, right?
Okay, so I'm hooked. They're not just growing, they're doing it steadily no matter what the market's doing. This can't be luck, right?
Right. And that's where this guy comes in, Feroz Aziz. He's the deputy CEO. He's saying it's all about how they treat their clients and this focus on managing the whole portfolio, not just individual products.
So it's not just, hey, buy this hot stock.
Yeah.
It's more strategic.
Exactly. They're tailoring strategies for each client. Long-term relationships, that's their thing. And their client attrition rate, it's tiny, 0.28%.
Wow. Most people switch advisors more than they change their clothes.
Mm-hmm.
What's keeping people so loyal? Is it all about this personal touch?
It's a big part of it, for sure. But they also talk a lot about risk-adjusted returns. Not just chasing the biggest gains, but finding that sweet spot between growth and stability for each client. They even raised their minimum investment, which is interesting.
They made it harder to be their client, and people are still happy. That says something. But how does this fit into the big picture? We're trying to figure out what this means for the future of wealth management, right?
Totally. And on Rathi, maybe they're showing us a trend, this move towards a more personalized, relationship-based approach. Clients are getting smarter. They want more than just a quick buck. They want someone who gets them, who can navigate this crazy market.
So is the old way, just pushing products, is that dying out? Are clients demanding more, like, holistic financial guidance?
That's a key question, right? Anand Rathi's doing well, so maybe there's something to it. But can it last? Can they keep this up as they get bigger, as competition heats up?
Okay, so we've got this client-first model, cool. But what are they actually doing with the money? What's driving these consistent returns?
And this is where it gets even wilder. They're not following the crowd into passive investing. They're doubling down on active management and using a lot of structured products, especially market-linked debentures.
Structured products, those aren't exactly beginner stuff.
Definitely not your average investment. We should break those down for our listeners.
Absolutely.
Yeah.
But before we do, even with all this success, Anand Rathi's got some risks, right? This active management thing, maybe it won't always win.
Yeah.
And they're going global into the UK market. That's a whole other challenge.
Yeah, you're right. A lot to unpack there.
So we've got this unique blend. Happy clients, unusual investments, and big ambitions. All this happening while the market's going haywire and the whole industry's changing. This is a deep dive, all right? Let's tackle those structured products next, and then dig into the risks and opportunities ahead. Okay, so, structured products. I'm guessing most of our listeners are like, huh. And you said they're a big part of what Anand Rathi does.
Yeah, they're not your usual stocks and bonds. It's more like you take different financial things, sometimes even those derivatives everyone's scared of.
Right, right.
And you combine them to make a totally new investment. It's like custom made for a specific goal or, if you have a hunch about where the market's going.
So less off the rack, more tailor-made. Can you give us an example, something concrete? And why would Anand Rathi be so into this?
Sure. So they talked about these market-linked debentures. They're basically debt, but instead of a fixed interest rate, your return, it's tied to how some other asset performs, could be a stock index.
Ah, so if the market does well, you do well, but if it tanks?
There's more risk, yeah. It's like riding the wave, but maybe with a little more protection built in.
Which makes sense, right? And Anand Rathi's all about that balance, the risk-adjusted returns. Structured products, maybe they're a way to do that, especially now when things are so unpredictable.
Exactly. You can design them to protect your money if things go south, or to focus on certain sectors you're bullish on.
That's clever. But I gotta say, structured products, they have this reputation, right? Complicated, hard to understand, maybe even a bit shady. How do investors know what they're really getting into?
Transparency is key, absolutely. You gotta read the fine print, know what assets are underneath, and really compare the potential gains and losses. No blind trust here.
So it's on the investor, too, not just the advisor.
For sure. And this is where that client first thing Anand Rathi talks about. It really matters. If they're serious about it, they need to make sure their clients get it, understand these products inside and out, especially the risks.
It's a balancing act, isn't it? These fancy products could be great, but you don't want people going in blind.
Yeah, no doubt. Which brings up a bigger point. They're killing it with this active management using these structured products, but the rest of the world, it's all about passive investing now. Are they going against the tide?
Right. Index funds, ETFs, everyone's into those. Lower fees, you just ride the market. What's not to like? Is Anand Rathi being stubborn here?
Their CEO, he's confident. He thinks they can beat the market, that's what alpha means, by picking the right investments. Their expertise, their research, that's what they're banking on.
So they think they're smarter than the index, basically.
Yeah.
Bold move. When everyone's saying, just follow the crowd.
It is. Makes you wonder, what's the future of active management anyway? Can anyone really outperform consistently, especially with all the tech and data we have now?
It's the big debate, right? Some say active management's dying. Others say there'll always be room for the pros.
And Anand Rathi, they're in that second camp, definitely. They think their way of building portfolios, plus this active approach, it's more than just matching the market. It's about creating extra value.
Makes sense.
Yeah.
But they can't ignore how huge passive investing is. Will they have to change eventually, or do they think they can stick to their guns?
They did say they're open to using passive strategies if it helps their clients. So maybe it'll be a mix, active and passive together to find the best solution.
Interesting. So we've got this picture, right? A company doing things their own way. Happy clients, unusual investments, big goals. But, like we said, there are risks. This active management bet, the complexity of these products, and going global, that's no walk in the park.
You got it. Let's dig into those risks next, especially this UK move. Success in one place doesn't mean it'll work everywhere.
Okay, so the UK, big move for Anand Rathi. What are they up against specifically?
Well, it's not like India. The UK, it's like wealth management central already, right? Tons of big players, been there forever, everyone knows them. Breaking in, that's tough.
So their name doesn't mean much there. Can't just coast on their Indian reputation?
Nope. They got to build a name, attract clients from scratch. And it's not just other wealth firms. It's those robo-advisors, the apps, all that. Younger folks, that's what they're into.
So competition on all sides, basically. They've got to stand out somehow, prove they're worth it.
Right. What's their edge? Maybe it's that personal touch they're known for. But even that, I got to tweak it for the UK, what clients they expect.
Right. Different market, different needs. And let's not forget, regulations. The UK, they do things their own way, and it's not always simple.
Oh, yeah. Huge hurdle. All the rules, licenses, making sure they're playing by the book could be a mess. Plus Brexit, who knows what's going to happen with that. Adds another layer of fun.
Competition, regulations, and just figuring out the British way of doing things. Sounds risky, but there's got to be a reason they're doing this, right?
Yeah.
What's the upside?
Well, the UK market, it's massive. Tons of wealthy people, they need advice, sophisticated stuff. If Anand Rathi can pull it off, like they did in India, the payoff is huge. They'd be a global player, for real.
High risk, high reward, the classic story. But what about this active management thing? We talked about how big passive investing is in the UK. Won't that hurt them?
Definitely a challenge. They got to convince people who are used to index funds, ETFs, the cheap and easy stuff, that their way, it's better. It'll actually beat the market. Prove it, basically.
So they're going against the grain again. Tough sell, but hey, maybe they can pull it off. Anything else risk-wise besides what we've talked about?
Well, the UK itself, the economy, it's not exactly smooth sailing, is it? Inflation, interest rates going up, and Brexit still causing ripples. That can make investors nervous no matter how good a firm is.
So even if they do everything right, stuff they can't control could mess things up. Reminder that there's always risk. Especially these days.
Yep, no guarantees. They got to stay on top of things, adapt, have a plan for when things go wrong, which they inevitably will.
Yeah. All right, so big picture time, expert speaker. We've gone deep on Anand Rathi. What are the takeaways? What can our listeners learn from all this?
I think it's a great example of a company that's not afraid to be different. They're doing things their own way, and it's working so far. That personal touch, the unique investments, the ambition, it's a good lesson for anyone in business or just investing their own money.
Yeah, it shows you need vision, you got to be flexible, and really understand who your customer is, no matter what you're selling.
Absolutely. And don't jump into anything without thinking about the risks, the good and the bad, whether you're staying put or going global, like Anand Rathi.
Great stuff, expert speaker. This has been a fascinating look at Indian wealth management, what the future holds for firms like Anand Rathi. Thanks for joining us, everyone. And be sure to tune in next week. We've got another exciting deep dive lined up for you.